quick recap of what has happened with markets thus far. This week, certainly we have seen many high key level events, including the Fed FOMC minutes and also the OPEC meeting decision. For the markets itself, despite what we have seen with the oil prices, it remained largely resilient. So first and foremost, we have had the Fed FOMC minutes, which really did not shed too much light for the market, besides the usual preemption of a hike that is likely to happen in June, which also happens to be what the market is largely expecting. There were some talks regarding the balance sheet reduction, but for the market itself, June will probably be the meeting where we are going to see more details being hashed out. As things stand, the current proposal certainly seems to be pleasing for the market, with a more gradual reduction in terms of the balance sheet, and the US markets had been largely resilient. But Thursday itself has seen an interesting development in terms of the OPEC decision. So we do know that OPEC and Co themselves have decided to extend the current production curve by another 9 months to March 2018. That had not really surprised the market, but the reaction itself have really seen a sell the news phenomenon carrying through. And in addition to that, I would say that there is some valid concerns coming through from the market with regards to whether the fact that we did not see deeper cuts by the coalition, and that will probably mean that they may see more headwinds, especially given the increase in output that we have had with US shale and crude output so far. But for the markets itself, even though we have had the 1.79 decline in terms of energy stocks within the S&P 500 index, the index itself went on to clock new highs, showing really resilience within the US markets and providing sort of mixed leads for Asian into Friday's markets. But for the week ahead, what are some of the items that we are going to look forward to? I think with the turn of the month, there are a slew of data, but as things stand, there are really two things that I'm looking forward and really following closely for the coming week. So Monday, we have had a lot of these markets, including the US, UK, China and Taiwan market closed for market holiday. China and Taiwan, and in addition to that, Hong Kong will be closed on Tuesday, and that will actually make for little leads. But as things stand for the US markets, what we have anticipated previous week was the Trump-Russia investigation, and former FBI Director James Comey is expected to testify after Memorial Day holiday on Monday, and I think that for the market is one key thing to watch for. Suddenly heightens the importance for those trading current dollar pairs. The dollar index itself have really sunk to the lowest level since November 2016, and any further decline or dampening from this political driver could really send the currency much lower. And for those trading dollar yen itself, seeing that 200-day moving average being one of the key levels to watch for as well. So the other factor that I'm going to watch for next week certainly is China's PMI. So we have seen some of these plateauing and slowing down in terms of the manufacturing PMI numbers. The number that is due to be released next week is expected to moderate as well. The official number itself, based on market consensus, is expected to slow to 51.0 from 51.2, and the Caixin private gauge is expected to slow slightly to 50.2 from 50.3, still remaining in the expansion territory above 50. But should we see any significant dip in terms of the number, I think that is going to do quite a bit of a blow to Asian markets, particularly looking at the ones like Hang Seng Index, which has been seen at the highest level on Friday today since mid-2015.